Hi, Tom Lydon with ETF Trends here in Hollywood, Florida at the Inside ETF Conference. And I'm here with Tim Gilligan from Legg Mason, James Norman from QS Investments. Gentlemen, welcome.
Thank you for having us.
So let's first start, Tim, with Legg Mason. Been in the money management business for a while. Everybody knows you from the fund business, but you've also done a great job in the ETF side. Talk about that transition.
That's exactly right. Thank you for that. We have 11 ETFs trading on the exchanges today. And as we're thinking about the business, we come with a very strong bias. Candidly, that we view the ETF wrapper as just that, it's a wrapper.
Yeah.
And if we compare an ETF with a mutual fund, we find much more in common than there are differences.
Yeah.
Right? So they're both open-ended products, both subjected to all the same rules and regulations under Act 40 law, both create and redeem shares at the end of the day at NAV. It's just we find an ETF wrapper cheaper and more tax efficient.
Yeah.
So our thought process is, why wouldn't we reach across all 9 of our affiliates, take the best of what they do, continue to do what they do, and just bring it to market in a different vehicle.
Which is fantastic, because when you talk about affiliates, it's like QS Investments that have worked with you on the mutual fund side. You both hear from clients and say, hey, we're interested in ETFs as well, right? So James, maybe talk about that. How has that transition worked for you, number one, and most importantly, as we're standing here today looking at 2018, what are things advisors need to be thinking about?
Yeah, it's certainly something that we wanted to always be in the ETF business, because our strategies are systematic and rules-based, so it's perfect for an ETF wrapper, and we love all the things that Tim talked about. And we made that transition successfully about 2 years ago, and really launched these products, and we really developed these products for what we saw coming down the pike. And I think advisors really are struggling in that, what do I do with my money? How do I invest my client money going forward? And in particular, they're not as excited about fixed income returns. They are excited about equity returns, but they're a little nervous at these valuation levels.
Right.
So how can they actually access that market, overweight equities, but at the same time get something that's high income, and in addition to that, control for some of the volatility when it eventually comes back to the market?
So give me a couple tickers on the ETFs that you folks have together.
Sure, LVHD is our most popular one, and we're very excited to be one of the fastest growing ETFs of 2017. And that one really is a low vol, high dividend, and we find that people want that income stream of around 4%, but they also want it in a low volatility type of wrapper and strategy. So we have that one, we have LVHI, which is the international version, and LVHE, which is the emerging markets version as well.
Excellent. And Tim, I know you're not holding back. You got a lot more plans for future rolls out of ETFs as well?
Absolutely. We already have 2 products in registration. They're the active management variety, one with Western Asset and one with Brandywine Global, both in fixed income, but expect more additional launches from us, both in smart beta as well as actively managed products.
Excellent. Well, congratulations, gentlemen. Great getting time with you.
Thank you very much.
Thank you.
Thank you.